This video is about a loss on disposal. A loss on disposal is recorded once a company sells a non-current asset and makes a loss by this. The case study is taken from chapter 35 of the textbook. I'm Carsten Berkau, full accounting professor in Osnabrück. My BasicsClips will help you to understand international bookkeeping. At the beginning, we take a look at WARDRIFT Limited's register of non-current assets. In the second line, we see the car by the license plate Osnabrück-Whiskey 200, which is disclosed at 40,000 cost of acquisition and accumulated depreciation is 10,000. Its carrying value is 30,000. We also see the car in the accounts. Before we start with the sale of the car, we have to consider depreciation. As the car is sold on the 25th of June, we first have to consider depreciation for half of a year. It gives us 4,000 euros. On the 25th of June 2003, the car is sold at a gross selling price of 31,050. It is always a good idea to prepare a drawing once we want to discuss about a disposal of an asset. We enter the cost of acquisition, which is in this case 40,000. Remember, cost of acquisition is always the net amount. The car got written off for 3 months, then for another 12 months, and then for 6 months. WARDRIFT sells the car at 25,875. At the beginning of the accounting period, the opening value in the property, plant and equipment account is 40,000 and in accumulated depreciation it is 10,000. I record the first bookkeeping entry, which is about depreciation. I make a debit entry to the extent of 4,000 and I credit accumulated depreciation. We could make one single bookkeeping entry, but instead of this, we split the bookkeeping entry into 4 parts. The cash receipt gives us the first bookkeeping entry with the number 2. It's a debit entry to the extent of 31,050. Debit entry cash bank, credit entry realization. Next we record value added tax. Gives us a debit entry in the realization account 5,175 and we credit value added tax. In the next 2 steps, we close off property, plant and equipment and accumulated depreciation to the realization account. We balance off the realization account. In the next step, we prepare the profit and loss account. Now the net loss in total will be 4,125. Before we start with the sale of the asset, we have to record depreciation. It will give us the bookkeeping entry number 1. Depreciation is 4,000 and we make a debit entry in depreciation and we credit accumulated depreciation. Thereafter, we balance off the accumulated depreciation account. Next, we start to record the sale of the asset. The company receives cash, which we record as a debit entry in the cash bank account to the extent of 31,050. The contra entry is in the realization account. The company is registered for VAT reduction. For that reason, we have to record bookkeeping entry number 3. 5,175 is the output VAT, which we debit to the realization account and credit to value added tax. The next 2 bookkeeping entries are to close off the property, plant and equipment and the accumulated depreciation account to realization. Next, I must balance off the realization account. Next, I record profit and loss. I start with depreciation. Bookkeeping entry number 6 is a debit entry to the extent of 4,000 euros, and I credit the depreciation account. The next step is to transfer the loss on disposal to profit and loss, which is done by bookkeeping entry number 7. I credit the realization account and I make a debit entry in profit and loss. When I balance off the profit and loss account, I get to know that there's a net loss to the extent of 4,125. 4,000 thereof results from normal activities. 125 is an extraordinary loss which results here from the loss on disposal. Next, I prepare the income statement. I don't have any revenue, I only consider depreciation to the extent of 4,000. As we consider the loss on disposal as an extraordinary item, I enter 125 negative as a loss on disposal. If the company, for example, is a car dealer and selling cars is their normal business, we would not disclose it as an other comprehensive income, but as other expenses. It would look like this one here then.
Now that you have seen the video, take the textbook and study the case.